powerful backdrop. This macro crypto summer is the powerful backdrop for assets because you're debasing currency. See my tweet from yesterday? I think it's already have 5,000 tweets, likes or something. As people understand that currency is being debased, assets go up. The assets that have network effects, technology and crypto, go up the most. That's macro summer and the debasement cycle.
Wait a minute, everyone. Welcome to Bitcoinzilla, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. Bitcoinzilla offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with Bitcoinzilla. Subscribe now. In today's video, Real Vision CEO Raoul Pal talks about everything driving markets as crypto keeps gaining momentum. Raoul shares his prediction on the crypto adoption curve and its potential to reach billions of users. So without wasting any time, let's dive into the video.
Macro summer, crypto summer. We're at the phase where Bitcoin halving is happening, the election cycle where they give out free candy to the kids, stimulus. And we generally get, we've got the central bank who want to cut rates, even though inflation's not playing that game. We'll talk a bit about that in a sec. And then we've got global stimulus cycle from the weekly global liquidity index, which has been rising. So this is the part where liquidity starts going up significantly. The Europeans are going to start cutting. We've already seen, I think, the Swiss cut. We're going to see a few nations cut. Latin America was first to hike, started cutting. Brazil. So we'll see the cutting cycle, global cutting cycle will pick up. We've got China with a very lackluster economy. In fact, it's a debt deflationary trap driven by an aging population and excess debt. We all know about those things because we're all living in one, whether we're living in Europe or living in the US or Japan. So they're going to stimulate more. The Japanese are pretending to raise rates, but they've still running kind of negative interest rate policies when you look at it in real terms. And we should see inflation continuing to slowly decline. Now, it's been flatlining for a while, but many of you see me tweet out a chart of previous inflation cycles versus this one. It always has this flat bit, then it hooks down. If I look at the Trueflation index, the guys at Trueflation have this real-time inflation index with millions of prices. That thing is now at 1.78%. It's falling. I know nobody believes me. Either way, the Federal Reserve want to cut rates. Why? Because of the Everything Code. I've told you about the Everything Code. If you've not seen it before, please watch the YouTube videos on the Everything Code. The Everything Code basically suggests that they have to use liquidity to monetize the interest payments on the debt. We're coming into the teeth of the interest payments now, and we're paying for the interest for the debt we issued during the pandemic. So we got a lot of payments to do. The bond market's freaking out from this, obviously, because they're like, how can we pay for all this stuff at 5.5% rates without issuing more and more and more debt? Gold market's breaking out on the back of this, and so it should be, because the answer is going to be they're going to have to use liquidity. Will they use quantitative easing? Probably not. Why? Because we all know the trick, and we know the name quantitative easing equals money printer goes blur. So what will they do? Well, they've been running down the reverse repo. That's okay. It doesn't matter what the format is, but they've been running down that, which means banks have been putting money into the market. Then they have been they're still doing quantitative tightening, but they're already talking about, at some point we need to stop that. Of course they do, because the reverse repo is almost empty. That runs the Fed out of opportunities at this point. Next part is, what do the Treasury do? Because the Fed is basically just helping the Treasury now. Well, the Treasury's been building up the Treasury General account. That's their bank account. And then what they will do is start running that down over the election, which is liquidity flushing into the system. We've got to get through, I think, Mike Howell talks about this. We've got tax season, and often that takes money out of the money markets, and then it goes into the Treasury General account, then it gets drawn down. Some people think that's liquidity negative. I'm not entirely sure. I think, but in the end, the Treasury General account will be like $1 trillion, and they'll inject that $1 trillion nicely back into our hands, and number go up.
Stablecoin data suggests that traders are preparing for Bitcoin price to hit a new all-time high. According to a report from KuCoin Research, the increase in stablecoin inflows is driven by the upcoming Bitcoin supply halving event, which will occur in 7 days. The report details how Tether and USD coin issuance continues to increase, reflecting a further rise in enthusiasm for crypto assets from European and American investors. While Binance USD, True USD, and PayPal USD all saw declines in issuance, the two largest stablecoins by market capitalization have continued to flow in the market. KuCoin research analysts wrote, the issuance of USDT increased by 5.825 billion in March, and USDC issuance increased by 3.803 billion, showing a significant increase compared to the previous month. According to ex-social network user The Moon, Bitcoin's current parabolic trend could reach $100,000 by the end of next week. While The Moon's projection appeared to be ambitious, analysts at market data tracking firm Sentiment corroborated these sentiments, arguing that BTC could soon hit $100,000 if the correlation between crypto and U.S. stocks continues to decrease. Sentiment's director of marketing, Brian Quinlivan, observed Bitcoin's divergence from the S&P 500, a historic bullish signal for BTC. According to Quinlivan, the longest bull runs over the last 15 years have often occurred when there is little to no correlation between Bitcoin's price and the S&P 500. It doesn't have to be opposite like this, but if they are moving in their own ways, it's a good sign that we can continue forward and hit those $80,000, $90,000, $100,000 levels that many of the bulls out there are often mentioning. Price analysis firm Econometrics asserts that if Bitcoin's growth after the fourth halving follows the same trajectory as previous cycles, BTC could go anywhere between $140,000 and $4.5 million per coin. That's quite the range for sure, but the point is that the lower bound is in the six figures range. Whether Bitcoin's price reaches $100,000 and beyond is something that the market awaits, but it appears that stablecoin inflows reflect market participants' expectations that BTC will go higher.
That whole liquidity event to come. Then we've got, oh no, the commercial real estate market. The banks are stuck with this. What do we do? Oh my God. Let's absorb it onto our balance sheet. So we've got that game to play as well. Plenty of games to be played for liquidity. Just at the right time. You don't want to upset the voters who want the markets to go up. And that is a very powerful backdrop. However, what's interesting about macro summer is those of you who don't invest in crypto or don't like technology, you get to have your chance to, because it's the commodity cycle. So commodities do well, macro summer and macro fall. So you've got a nice commodity boom to come. Usually value stocks finally do something. The smaller companies tend to do something over this period. Everybody. It's a game for everybody to play. That's why it's summer. The living's easy. You can make money in pretty much anything you own. Even banks go up over summer.
Although Bitcoin is not for everyone, there is no denying that it has the sort of high-octane fuel needed to deliver tenfold returns. During the period from 2011 to 2021, Bitcoin was the top-performing asset in the world, and it wasn't even close. Bitcoin delivered annualized returns of 230% per year. The next closest asset class, high-growth tech stocks, delivered just 20%. That helps to explain why Bitcoin has gone from being a $1 asset in 2011 to a $70,000 asset today. While past performance is no guarantee of future results, the growing consensus on Wall Street is that Bitcoin still has a lot more room to run. Future price forecasts range from $100,000 on the low side to more than $3.8 million on the high side. And according to Kathy Wood of RK Invest, Bitcoin is now highly likely to hit a $1 million price tag before the year 2030, due to all the money flowing into the new spot Bitcoin ETF. So you can see where I'm going with this. If you spend $70,000 today to buy a single Bitcoin, then you could theoretically have a nice little $1 million retirement nest egg by the end of the decade. Of course, this is a highly risky strategy, and not one that any responsible financial planner would ever propose. After all, Bitcoin remains a highly volatile asset. Overnight, your retirement savings could vanish into thin air, or the Securities and Exchange Commission, SEC, could decide to regulate Bitcoin out of existence. However, the new spot Bitcoin Exchange-Traded Funds, ETF, will likely help popularize using Bitcoin to save for retirement. Fidelity Investments has already opened up some retirement accounts for Bitcoin, and it appears likely that Bitcoin is going to become an option in many 401 retirement plans. Most likely, these investment options will cap the amount that you can allocate to Bitcoin, but you can still use them to turbocharge your retirement savings. And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.